Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Wednesday, August 30th, 2023. Before we jump into the charts, just as usual, I want to encourage you to please click like if you haven't already, and subscribe to the Wicked Stocks YouTube channel. Also, share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Tesla report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for 20% moves or more on those underlying stock picks. Just this week already, we put out a Netflix video analysis on Monday. There's another to come out on Thursday, and so forth and so on. And we also offer a 5-day free trial up front. So, you can subscribe, check things out, check everything out, check out that Netflix stock pick, the next one that's coming out in a day or so. And if you don't like what you see after 4 or 5 days, you can bow out and cancel your subscription at no cost to you whatsoever. So on with the chart. Start with the big picture, work our way into the day itself. This is a weekly bar chart just to show you that, a month and a half ago, we spent the better part of a month testing what had been a targeted resistance level at 306.13. It was targeted following the settlement about 4 months ago above this steeply descending 18-month channel top, now at 170.94. 306.13 was our first big picture objective. It held essentially, and yes, we did push through it substantially 1 week, came falling back by the end of the week. And following the test of 306.13, I'd been mentioning how the channel bottom that is now at 219.12 for the week itself should be considered a 1 to 2 month likelihood, or at least attainable. That channel dynamics do suggest that once you test the channel top, the channel bottom is calling. And calling it did. We tested it over 2 weeks ago. 219.12 on the daily chart, it comes in at 219.66. And following the test of this channel bottom at 219.66, 219.12 on the weekly chart, I'd mentioned how over the next 2 to 3 months we can claw our way back to that 306.13 longer term channel top. And on the way up, these convergence speed lines are considered a 2 to 3 week objective. So we are a solid just about 2 full weeks into this and approaching it. 259.70, descending 2/3 speed line based on the July high against the more recent low from a week and a half ago. And 263.67 is a longer-term rising 1/3 speed line that we violated several weeks ago, about 3 full weeks ago, maybe close to 4. That set up 219.66 as a 2 to 3 week target, and we tested it in about a week and a half. So we are pushing into this meaningful zone, and I eventually will have to decide which is our upward pivot point. I've been mentioning how 259.70 would be a settlement above, signaling the 306.13 level in as little as 2 to 3 weeks. Keep in mind, 306.13 is considered a 2 to 3 month target anyway. It's just that we can top out in the 259.70 to 263.47 region for the week itself and fall back possibly by the end of next week to 219.66. We could fill this wedge out for a couple of weeks before then presumably tipping up to 306.13 with a settlement at that point in time, I think 259.70. But I'll get to that in a moment. It really is a range right now. I would feel comfortable anticipating 306.13 over the next 2 to 3 weeks if we can close today above 263.47. Now, there are some Fibonacci levels, 5/8 on the way up. There are other things in the mid to upper 260s that I'm not underscoring now as significant, but may well then skew more toward this long-term speed line of 263.47 as our upward continuation point into later September. So for right now, yes, if we close today at 260 or 262 inside this wedge, I'm still calling it that the market may well top out in this vicinity through next week, and from here we can fall back to 219.66. If we close today above 263.47, then yes, over the next 2 to 3 weeks, I would expect another test of the 306.13 channel top, where we can once again top out on a monthly, possibly quarterly basis and fall off again. As I've been mentioning, we could trade inside this channel structure through the rest of the year. And this base at 219.12 in reach over the next week or two, so long as we're unable to push through and close above, at this point in time, 263.47. I still call this a four-star resistance. In other words, multi-week containment. Can contain highs into later September, and we can fall off within a week or two back to 219.66. And inversely, if we close above 263.47, just the opposite, 306.13 becomes our next 2 to 3 week target. So let's sort of zoom in a little bit for the day itself. Of course, I've got 259.70, and I do have 234.13. That is just an intraday support level. That is probably the wrong chart to show. This is the chart I'd really like to show. Based on Tuesday's high, the 239.02 channel bottom. This is a new channel bottom coming up, and it's a better part of 2 weeks. It's a week and a half anyway. It can contain session weakness. Now, I don't expect to see it today unless we were to break 250.03. And yes, this former channel bottom has not performed all that well, upside or downside. I haven't weighted it very heavily. It was a session containment level, now reduced to intraday. We could bottom out intraday at 250.03 and test 259.70. This is kind of the day trade range right here. If we break 250.03, then I think you should anticipate 239.02 intraday. There's a lot going on in the upper 230s. You have all these former highs here over about a week ago. Just lots of stuff. And I do think 239.02, if given the opportunity, if the market falls to that area today, is a solid zone to buy into. And it would be, if we were to test 259.70 today, and we could fall back to 239.02 perhaps within the day. So there is the possibility we could test 259.70 and within the day fall all the way back to 239.02. We've seen Tesla behave like that before, and I will say that if you set a short today at 259.70, and by the way, 259.70 well suited for day traders, 3 to 5 day swing traders, and 2 to 3 week position traders. As I mentioned, 259.70, the beginning of a range up to 263.47 that can contain weekly buying pressures, and once tested, we could fall back within a couple of weeks to that 219.12 long-term channel bottom. On the way down, we do have today 239.02 that can contain session weakness. And if we were to close today below 239.02, I think in pretty quick order, that 219.12 level is likely, possibly within 2 to 3 days, given the presently heightened volatility. And that 219.12 level is once again, well, it's 219.66 on the daily chart, and on the weekly chart, it's 219.12. So there is the scenario possibly where we test, this 259.70, 263.47 area, and we fall back aggressively. I've reduced 234.13 to just an intraday support. I am now leaning on the rising channel bottom as a level that can contain session weakness, and the point that if settled below aggressively pivots the market south through the rest of the week, 219.12 to 219.66, then anticipated within 3 to 5 days, where once again we can bottom out through September, even through the rest of the year, and above which the 306.13 level remains a 2 to 3 month target. Make that 2 to 3 week target if we close today above 263.47. I think that pretty much rounds it out for Wednesday's Tesla report. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow, of course, with Thursdays, and you have a great day.